Okay, everybody, here we go. It is me, Gregory Mannarino, Wednesday, May 10th, 2023, people. It's just beautiful. It's absolutely lovely. What am I talking about? I'm laughing. I shouldn't be laughing. So we just got this big anticipated inflation report, and you're not gonna believe what I'm about to tell you. Well, inflation continues to rise. Yes, it's still rising. Although not more so than expected. Now, on the back of this, on the back of the fact that according to their own numbers, inflation is rising. Oh, it's rising. The stock market is getting off right now. It's spraying its shorts all over the place. Stock futures were negative, were lower just prior to this inflation report. So again, the report comes out, inflation is rising. And stock futures just bang higher. You can't make it up. You can't make it up. So as I am doing this video blog, trading doesn't start for about 45 minutes from the time I am doing this. Okay. Futures are pointing towards a higher open for the market. Okay, let's see where this freak show is going to go today. What else is happening here? Gold and silver catching a bid. Very lovely. Cryptocurrency is getting bid higher. Crude oil is getting bid higher. Relative strength of the dollar is lower. The 10-year yield, in fact, the whole yield curve just dropped. Just dropped a little bit. So it's kind of an interesting paradox. We got a little rally going on here in the debt market. And what looks like here, the implied open for the Dow right now, as I am doing this, is 141-ish points, 140 points right now. All right, whatever. This market is just so twisted, and that we already know this already. This is nothing new. But what do we understand is going to continue to happen here? Inflation is not going to stop rising. People are going to continue to be pressured here. It is not going to stop for as far as the eye can see and then beyond here, people. So I want you to just be ready for that. I know you all already know. With that, if we understand, let's put an easy, very simple perspective on this entire thing. All right, are you ready? Okay. I'm laughing again. I got to control myself. If you and I understand that the issue of debts, deficits, and I'm not even talking about this debt ceiling thing right now, okay? We'll talk about that in a second more. If we understand that inflation is going to continue to rise, that in aggregate, debts and deficits are going to continue to rise, what do you want to do about it? What is the most logical step that you and I need to take? Well, we're not going to change a damn thing. You and I have been on target with this for a decade. Okay, we're going to bet against the debt. You know, people ask me all the time, hey, Greg, what does it mean? What does it mean to bet against the debt? It's very, very simple. You know what I'm talking about, those of you that have been with me any length of time. Holding hard assets, physical gold and silver, that's how you bet against the debt. You become your own central bank. Now, central banks, according to Ben Bernanke, you remember this moment in time here? It's been memorialized or immortalized, whatever. He said, Ben Bernanke said, central banks hold gold only for tradition. It's traditional. So they hold gold and they're acquiring more. Central banks around the world, in case you don't know this, are acquiring gold at their fastest pace ever on record. Don't take Greg Mannarino's word for this. Just check it out for yourself. Okay. So, Ben Bernanke, central banks are holding gold for tradition. So maybe you should hold it for tradition too. What do you think about that? Yeah, what a great idea. I love gold. You all know that. Greg Mannarino loves gold. Absolutely. But silver is where it's at. Why? Not because it's the quote-unquote poor man's gold, but because in my view, looking at the Dow gold ratio, gold-silver ratio, it's insanely undervalued. In fact, it's the most undervalued asset ever, in my opinion here. So that's how you take advantage of exploding debts, exploding deficits, inflation that is going to continue to rise. Again, it's astonishing to me why there is no outcry. We have central banks, none more so than the Fed, raising rates, raising rates, raising rates, raising rates. Every single FOMC meeting monthly now for months and months and months and months. They're determined to hit that 2% target. That's what they're telling us. So it must be true, right? When a central banker tells you they are determined to do something and it would be good for the people, you know the polar opposite is actually true. And I don't have to say that again. You all are well aware of that. So again, we've been hearing this story for like, I don't know how freaking long now. Okay. It's just, and central banks have been raising rates, I would say rather aggressively, collectively now for months and months. And what's going on? Inflation continues to rise. But where's the outcry? Where's the uproar? Where is the revolution? It's never going to happen. I know a lot of you are going to say, hey, Greg, the revolution is happening. It's cryptocurrencies. You know what? Until the market capitalization of cryptocurrencies begins to explode, and what we've watched recently, look, I'm a big crypto advocate. You all know that. I get beat up every day by anti-crypto people. They don't like this stuff. That's okay. I'm not telling them they have to. All right. But when you have an asset class that has literally had its market cap or its overall value slashed in half, okay, we understand the situation here. You know how it's going to work in my view here. Cryptocurrencies are going to vastly, in my view, increase in value at the moment of implosion or when the debt market implodes. But look what they're doing here. Again, another massive effort to keep rates suppressed. Who's buying all the debt here this morning? Is that just miraculously happen? Why did the entire yield curve drop this morning? It's because people are getting in here and they're buying debt, or institutions are buying debt. That's how it works. It's kind of the opposite of what you would think. People buy the debt, yields drop. When people sell debt, yields rise. I mean, just as an example, a couple of weeks ago, we started seeing 2 weeks ago, the short end of the yield curve go up, an incredible amount here. This is fear. You all know that. And that's because it was selling off. You understand? We're going to get a massive, I can't even stress this to you. What we witnessed recently with the short end of the yield curve, that tremendous spikes, this is going to be the entire yield curve. And when the entire yield curve spikes like this, forget about what that's going to do to world equity markets. When I say meltdown, I'm talking about a meltdown on a scale that people aren't going to believe. Truly. And again, no accident. It's being set up here as the current system is being dismantled piece by piece by piece by piece. Anyway, so that's the story. Let's establish all that. I think we know what's going on. So it's kind of interesting. So again, we get an inflation number higher than expected. Not higher than expected. I'm sorry, as expected. But it is rising still in the stock market right now. I mean, stock futures are even higher. So you got here Dow futures up 171 points, S&P up 31, NASDAQ 115. So this market's about to get euphoric, at least at the open. Let's see how this plays out through the rest of the day here. It's going to be very interesting, as always. But what does it mean for you and me? We're not going to change a damn thing. We're going to continue to do what we're doing. We will never deviate because, again, debt market, ticking time bomb. You all know that. It's going to go up. Do you sincerely expect debts and deficits to get any better here? No, they're not going to here. Now, with regard to this debt ceiling, I love how it's being played out. You got the Confederacy of Dunces. Okay, they're all meeting and they're vowing to talk. They're vowing that they're going to talk. Oh, my. Oh, I feel so happy. I just don't know what to do with myself. How about you? Anyway, that's the story this morning, people. So it's interesting, in my view, to see where we're at here. What are we going to do? Well, we're going to reconvene later, 1:05 p.m. Pacific Standard Time, to sum up. Someone keeps telling me I'm saying this wrong. It's not Pacific Standard Time. It's Pacific Daylight Time. Is that correct? Because let me hear from you. I maybe I'm wrong by my Pacific Standard Time. It's PD. Let me know. All right. Anyway, again, this guy here loves you a lot. People, please do me a favor. That thumbs up is so valuable. Take a nanosecond. Just click that thumbs up if you like this video. If you like my work, I appreciate that. Comment. I want to hear from you. I read the comments. I promise. Maybe I don't write back to all of you, but I do read through the comments. So you can rest assured that I see your comment. All right. And I would really appreciate it if you would share this video. Share my work, please. I really am counting on you to get it out there. All right, with that said, I think that's about it. All right, so remember, inflation continues to rise and the market is just spraying its shorts all over the freaking place about it. All right, love you a lot. See you later. 1:05 p.m. Pacific Standard Time, Pacific Daylight Time. One of those two. I'll see you.